Okay, then let's start. Um, Dow wasn't that bad. Nasdaq got slaughtered. Let's uh let's just look at some of the stocks here. We'll do something new. And that got a down signal. That's not surprising. See, it broke back here. That's kind of how when I knew Nvidia wasn't gonna make a new high, I had a suspicion. But now we've cracked it again, and this time I think it's for real. It should have dropped back here, but they saved it. Um, yeah. Now I think we're dropping for real. Let's see what the weekly looks like. Yeah, look how open that is. Now the thing that the market is probably going to do that you have to watch out for that's going to be this week is it's going to hit these levels like Nvidia will hit 167 and it'll probably do it Monday, like first thing Monday. You'll come in and this will be at 167 and um Amazon will be here at 180. Maybe not that. Maybe here 194. But I think these will start hitting these levels. Google will probably be 291. I think they'll start hitting these levels and people will step in and buy. And I think it's a mistake. I think they're being set up. I think it's going to hit a technical buy level. Like right here, your Google technical buy is 295 right in there. And so I think you're going to have a bunch of inexperienced people come in here and think, oh, the market always bounces and it's at this super technical level and I'm going to get a rally. And I think the market's going to give them a little joy and then I think it's going to rip their faces off and I think it's going to be so bad and so fast that they'll have trouble getting out of stops. Because I think the market just wants to get rid of stock. Um, I'll get to Tesla just a second. Here's Taiwan Semi. Look at that. Open up. Look at that open up. And this could be serious trouble. And that's what I was trying to warn of. The market is best case scenario going to get a good drop. That's best case scenario. So if Taiwan Semi breaks this line, then it's in deep diggery do. Like that. See how it broke that line and then dumped down. It already yeah, it broke the weekly line because your weekly line Here, I'll draw it just so you can see. Because what's obvious to me is not always obvious to everybody else. See how you broke that line? Make it red. There we go. See how you broke that line on the weekly? That means that this cycle is over. This bull run is over. Now you're correcting it. So that gives us our levels. There's your start of the bull run. There's your end of the bull run. Roughly. I don't have it on Snap, so I'm in the general area. So right now we just hit the very bare minimum for a pullback on a 5 wave. And I wouldn't even call that the bare minimum. I would say that would be in a super bullish market where you're squeezing up, that you would only do a 23% pullback and then rip up. Are we in that market? So your next stop would be the 4 wave, which is going to be right here because your waves are 1. Actually, this looks like 1, 2. This has to be 3, so this has to be 1. 1, 2, 3, 4. 1, 2, 3, 4, 5. So this is your 4 wave down here. So when you end 5 up, most often you come back into this range of the 4. So between the 38 and the 50. This market, on the indices, especially the QQQs, likes to do 78% corrections on everything. The market generally lately, previously to say this year, this last 2 years, it would do 618 corrections, 50 to 618. This would be your box because it's down in the 4, and that would just generally be your box. Now they tend to drop all the way down here. So we're talking Taiwan Semi at 190. It's at 330 right now. So that's what I say when I was sending those messages to get the F out. This is what I'm talking about. This is your possible landing zone. Now, we could hold up in this 4, and that would be 263. But again, 263, and you were at almost 400. So that's why I give those warnings, and I say to stay out of tech. This is 1, 2, 3, 4 weeks. So 4 weeks. And yeah, the whole time I'm saying get out of tech because this is coming. But yeah, I digress. Here we go. Okay, so most likely you're going to come down here to 230 to 260. That's still a heck of a drop. And so I think you're going to have people that make this mistake that come in here and say, oh, this is going to hit a technical level. It's going to close this gap right here at 304. And they're going to say, I'm going to buy this at 300 or 298, and I'm going to get a steal. And I think they're going to get a bounce, and then I think it's going to drop. And yeah, the drop's going to be sudden. My guess. So there's Taiwan Semi for you. Tesla. Where is Tesla? For the love. It's got to be right in my face. There it is. Okay. Uh-oh. You see why I uh-oh'd right away? Not good. Okay. Tesla's probably coming down here, boys and girls. So let's get a good look at Tesla. Ooh. One, two. We haven't had the three yet. I don't know how to say that. No, we haven't had the three yet. So 1, 2, 1, 2. That's 5. And down. This should be your 3. This should have been your 3. 4. I'm going to call that 3. 4. This is a flat. This is your. This is a lot of overlap. So this is all since 20. Well, I'll go back here. Since 2021, this is some sort of flat. So I think you're going to come down here to 298. Just a general thought, but I don't think you're done. I think you get a new high out of this eventually, because I think you break this RSI here. Yeah, look, your peak RSI is way down here. Your price was $13 when you had the most investment. That's craziness. So you've got to break this RSI. So that's why I had my target at 420. I thought we were going to do it, or 420, 520, 525. I thought we were going to do it back here. I thought we were going to pull back and hit it again. But that probably would have broken the RSI. So I don't think it was the right time. I think it's going to reset this and then go. And that would make sense because Tesla's an energy company. Tesla also makes, as we know, electric vehicles. If gas is going to go through the roof, then everybody's going to want electric vehicles. They're going to run for the Teslas because Europe and the United States, that's really the most available and the best. But what this will do in the future is it will open the way for Chinese electric vehicles, because China has literally boatloads of them. So the demand, when oil starts rising up, really flying and getting really expensive, like $10 a gallon, people are going to freak out. They're going to want electric vehicles. Electric vehicles are going to be really expensive. That's where the Tesla Y option, or whatever thing he's talking about, the cheaper version, that's where you'll want to see. That's also when the Tesla rental will be huge, I believe. And okay, I got sidetracked. But anyways, this will open the way for all the Chinese electric vehicles, mainly in Europe, because they won't have any problem with dealing with China. America will have some sort of issues with that, but once it'll be like they're cheap, America will be like, oh, yay. So, yeah, that's Chinese electric vehicles will be huge in the future. But so will Tesla, because here's the other part of that. Tesla has the rights to all the electric charging station outlets for the United States. So think of Tesla as basically Chevron and Texaco, like as one. This is like the largest oil company when they were just starting with automobiles. This is like the largest gasoline uh, company. I don't know how I'm not explaining it right, but this is like all the United States gas stations in one company right here. They'll have the rights to all that because you'll have to use their charger. So that's really why they're an energy company. That's where they'll be huge in the future. It won't matter how many cars they sell, because every car that sells will have to pay Tesla a portion. So it's like the ultimate gig. Like if you want to make an electric vehicle, pay Tesla. But until then, I expect this to drop 297, 298. Right there would be where I would look at it. But this could go, it could go down here to 195. And if it came down to 195, again, that would be one of those things where that would be a gift of gifts. And you broke the monthly. So this cycle from here to here, which 1, 2, 1, 2, 3, 4, 5, that is clearly 5. So that's your 5 waves up. So that gives me something to work with here. All right. So we're looking at 299 to 254. But, and look where this 786 is. Look at this trend line right there. And the 50% is right on 1, 2. So I bet we drop to this 50% at 299, 300. Imagine that. And I think you get a good bounce, probably up to 350. And then I think you roll over hard. And I think you come down here. I think you do touch this 197. How great would that be? Wow. Okay. But that's assuming we get some serious downside and nothing lifts the market back up. Because we could pick it up right in here, right in this 260 to 290 range. I mean, it could lift there and go. You have to be ready for that. And we'll know as we get closer. But as of now, I'm looking for big time drop in Tesla. So I have no interest in looking to go long here. And look on the weekly here. I'll get rid of all the nonsense for you. You're squeezing down. You're in a squeeze down. You're between the 5MA and the lower Bollinger. You're squeezing down. There's no reason to be bullish here at all. If you break the lower Bollinger or you're at the lower Bollinger and you want to take a shot at bouncing up like one of these times, have at it. But understand that the bottom can fall out from under you. That's what traders, and I'm doing my bunny ears, traders don't understand that if they're going bullish all the time. The bottom can fall out from under you right now. Big time. Oh, yeah, look how ugly that is. Good night. Yeah, that's ugly. UGL&Y. Okay. What is now? Oh, ServiceNow? Ugly. Ooh. Okay. Uh, I think this is going to rug pull again. Actually. Because it needs another wave. You had bullish divergence here, but you peaked your RSI in just 3 waves. So I think you're going to dump down again. And look at hey, you've already broken that. You broke that a long time ago, but yeah, so you're going to correct this. This will break this RSI low. So look at that. Look how much damage is left. Oh, this faked people out. Oh, that faked them out good. They thought it bottomed. Yeah, all those people that thought they bought a bottom here, I think are going to be mistaken. I think this is going to double roll on them. And pretty close to 94. But you could go down to 54. Here's your 4 right here. So 80, 79, 78 probably would be your, that's where I think it would probably pick up. But I think all these people that bought this bunny ear bottom are going to get rug pulled. And it's going to go real bad when it hits their stops. I think that'll be a shock. I think it'll flush. $67. So 80's right there. 75. Yeah, I think you could flush to 75 real quick. You broke out of the daily. You need to stay above that, but I don't think you will. You need to stay above this. I'll make it green. Need to stay above that, but I don't think you will. I think you're going to crack that, and because I think you need to break this RSI. And then I think your RSI will bounce, and then you'll get a bullish divergence, and then someday, maybe in the future, this will come out of it. Oh, there's Micron. I was like, what do they list Micron under? I say a lot. I notice that when I listen to my videos. I need to stop doing that. I want to show you something on Micron. Can you see this? This portion of the screen? Where it has information. Well, that's doesn't matter. That's not what I want. I screwed up anyways. I can show it here. Can you see this? Okay, look at that. They absolutely slaughtered earnings. They had a massive blowout. I mean, they just crushed everything. So I wanted you to see that before I show you the chart of Micron. This was earnings. Operating revenue, 23.86 billion. Earnings per share, 12. I mean, their operating revenue was 13.6 and earnings per share was 4.6 back here. They just hit 23.8 and 12, and they raised guidance. So they crushed from this level back here. They crushed that, and they raised guidance. And what happened? They're selling it. That is not an indictment of the company. That's an indictment of the conditions. The market is not safe. That is just people scared. There's nothing wrong with the company. They're not afraid of the company. They're not worried about, well, they are worried about earnings, but they're not worried about They're not worried about Micron. They're worried about the condition that Micron is in, if that helps. Now, on a technical level, you're just way spread out from these moving averages. You're way too far away from this 50 here. You need to come down. That's just a technical move right there. See, look at you just went up way too high, way too fast. So now you come down. That's technical. There's your informational on it's not a bad company. And your reasoning is it's not the company, it's the market. So the technicals show you it needed to come down. The reason is it's the market, not the company. So that should tell you that this is something that you would want to pick up when it comes down, because it's going to be a gift. So let's see where we're sitting at with it, huh? Because that move is outrageous, I would think. I would call that outrageous. Okay, let's get on a big scale, see where we are. Good night. And again, that's your low. So there's your 1. So you did have a 3 here. So this is your 5 of 5. So this is a blow off. So, I mean, you could come all the way back down to 117 on Micron. Holy cow, that would be amazing. But you haven't even rolled over on the monthly. So that's what you got to watch out for. You're still squeezing on the monthly. So really, we're looking at 355. And I just want to see something. Yeah, look how far you can come down and still be bullish. And SanDisk is probably going to be very similar to this. This is one of those ones where I think traders are going to make a mistake and they're going to jump in at 411 or so. Just a hunch. Look at that. You were riding the lightning for good night. You were riding the lightning in this thing since November. Just hanging on by the seat of your pants. This thing was one sneeze from tipping over at any moment. And then it did. So you should come down and reset this RSI. You should come down and down here. So I think you've got a big drop coming. You're on the mid Bollinger. This is one of those ones. Yeah, 400. It's going to hit 400 and they're going to defend it. And it's probably going to bounce to 415. And they're going to say, load the boats. We're going. And then it's going to come down to 220. That's just a hunch. I mean, you can buy it at 400 if you wish. I don't think that's the play. This being the low, we can go for 265, 217 to 265. I said 220. So that would be the range, I would think. The market loves these 786s on the indices. So if the market wants to get crazy, it can drop it to 147, 150. Wouldn't that be something? And there's a second problem again with not with Micron, but with the conditions. It's not just the war. It's not all of that. The problem is the dollar. The problem has always been the dollar. The conditions changed in 2016 when they flipped, when we went from negative interest rates to rising interest rates. Rising interest rates and rising debt are a death nail. They had to revolve out of the dollar somewhere. The dollar is backed by oil. Hence, why they're attacking Iran. They need to control the oil coming through the Strait of Hormuz. That's the dirty secret that they're not telling anyone. This is another oil war. They all are. But it's a war for Israel because, well, Israel owns those companies. At the heart, Israel doesn't, but the owners do. But yeah, the dollar, the rest of the world wants to pull away from the dollar, and they may be successful. In which case, everything tied to the dollar would crumble. And so that's why the saying, it's not good, the prices of goods aren't going up. The value of your dollar is going down. That's what's really happening. So these companies are just getting de-dollar valued. And so that could be huge. And they won't tell you that. They'll tell you the reason is war or Trump or whatever else. But yeah, this could have a huge drop. So in that, coming out at 400, I mean, that could be something it could do on Monday or Tuesday. All right. Why am I so bullish on potash? Let me take a look at my potash. And why is IPI my favorite? Well, because of that. This is just a big old leading diagonal. And so now we're coming out of it. This was 5 waves. This was 5 waves. And we came back, corrected the low, and now we're coming out of it. So in the future, I expect IPI to be in the up here 3 to 500 range, and we could go past this. We could make this a base and just fly out of here. Um, I'm bullish on potash because it's used for food and oil. So, I mean, you can't get more necessity than that. They use the silica for oil, they use it in oil drilling. So that's where the majority, and if you look at their financials, I don't think this breaks it down like that. Maybe it does. But their biggest jump was from the oil. That was their largest jump in revenue. So, yeah. And potash is a used with, it's made with natural gas. So again, this is a natural gas problem. And a bunch of this potash, I think it's 30% potash and urea, helium, like 30% of it, and helium was even higher. Helium was like 70% or something, comes out of the Strait of Hormuz. And those are the facilities that they're hitting. So these things are all just going to go crazy. And it's going to be the situation where I say it's going to be have or have not, because it'll get to a point where you just can't get it. And people don't understand that because we're still in the, oh, I just order it and it's here. Click and I get. Click and I get. What happens when click and no get? That's what you have to start thinking, because that's what's coming. Click and no get. Because it's not there. There's no way to get it to you. So then when that happens, to get it, it becomes very, very expensive. So those companies that have it, their value becomes very, very high. So that's why I like all of these. Scott's is not my favorite. Just saying. MOS, good. Grow should be good. It's the same with buying food. Look at these charts. This is corn on a monthly. It's just turning up. I mean, this thing is going to start ripping up. Um, Look at that thing. That thing's bottomed. And then you have, hey, that's not right. Give me my Java. How come that's not coffee? What's going on? Hmm. What the heck? Where's my coffee? Anyways, coffee had a massive day. How come Java isn't on there? Weird. But yeah, food is all going to break out. Okay. So I'm going to digress and go back again. Talking about energy, because I'm going to go to HNRG here. This is monthly. This is coal. Look at this. I mean, I don't even need to say that's just stupid, right? I mean, coal. Yeah. Okay, so let's look at Hallador. Yeah, that was down 6% today. That went down to 15. I bought some options on this, but I didn't know it was down that far. Huh. Okay. So coal should be the next to run because China uses a lot of coal. They were trying to wean off of it, but with the oil now, uh, they're going to start burning coal again like crazy. And they're going to get most of their coal from, I would imagine, us. And that goes for South America. It goes for America too, because as much as people love to complain when times are good because it's easy to complain. There's lots of time to complain because times are good. You don't have to do anything. When times are bad, necessities become more necessary, if that makes sense. So it's more difficult to complain. There's less time to complain when you're more worried about day-to-day life. They complain about dirty coal. When gasoline gets to $10, they're going to start shutting their effing mouths and start saying, burn all the coal on the planet to lower gas. And so that's what's going to happen. But as a chart wise, creaking down and broke. I haven't broken the monthly yet, which is why we're right on that mid Bollinger, which is why I want to see where we go Monday. Because they can still take it out of this. Testing the breakout down here at 14, basically 14. I would like to see that. Test this cup and handle range. So they can do that. But coal is going to be on the quick turnaround trajectory if gasoline keeps going up, if oil keeps going up. That's going to be your air quote, bunny ears, cheap alternative is going to be coal. Now, HNRG might have issues because of who they sell their coal to. But that'll all change. That'll all work out. But until then, we could get a big drop. We could go down to $11 here. We could go down to $11 with. Now I want to see something. This was just starting to break out. C80's not that far. What about Warrior? That's a lot of overlap. 5, so then we'll call that 3, so corrective. So then it needs to come down again. So yeah, Warrior will probably go down here, close this gap at 67. So no, I don't think gold's going to be immune. I think gold's going to get smashed here. Which that makes me wonder. Indo looked great, but Indo again is different than other oil because Indo is a play on China needing China, Japan, Korea needing oil from somewhere other than the Middle East. That's what Indo is dependent on. That's why they're a war play, air quote war play. When tensions get high, Indo goes up because then those other countries start buying oil from Indonesia as a backup in case something happens to their markets. So that's the play with Indo. Indo may move independently from other oil stocks because it's dependent on those Asian countries needing or going for oil outside of the Middle East. And they do that when there's tensions in the Middle East and they're scared. And right now, for whatever reason, they're not getting any oil. I don't know if they haven't made deals with Indo. I don't know what the story is there yet, but this is I mean, this thing is ready to go any day. Ready to go. This is like VIX. That's why I call it Indo VIX. And that's why it moves with VIX, because obviously when tensions rise and those countries need to secure oil contracts outside of their normal routes, yeah, that's why Indo moves with VIX. But yeah, Indo should be popping soon. Any day. Look at it. Look at it. It's building like little cities down here. And then just one day it'll have a skyscraper. Oxy. Oxy, that chart looks great. As much as I've been hating on Oxy all my life, I might have to come around. Oxy was always the joke oil company. great. AXTI. Whoa. Semiconductor substrate. Yeah. Look at that. Just a series of lower lows since here. That's a fifth wave for sure. So it's gonna erase this entire wave. So you should come down to about $17. Yeah, this is just all negative divergence. 3. Now you could stay bullish because you're still squeezing up, but I think this is probably probably topped, and I think it would come down to that 17 range, somewhere in here, $17. That would be my guess. Is it JVA? Did I add a letter? Yeah, coffee. Okay, there we go. There's coffee breaking out again. And see, it should have broken out back here in March. Yeah, look what it did back here. It's going to do that again. Getting ready to do this again. Why didn't the weekly chart bother me on IPI? Because it hasn't crossed. If it crosses, then I'd worry, but it hasn't yet. Now it did cross on the daily. 1, 2, 3, 4, 5. So you'll probably come down here to 32 or so. Yeah. You probably go down to 32. I think you bounced to 40 or so first because it was. Where'd you go? Yeah, I was saying it turned over real quick on the day. I saw this thing. I saw these Bollingers pinching down, and I bought it right in here, right at like 38. But yeah, it could just be a bounce to 42, 44 before it rolls over again and then drops down to 32. That could be. But again, if this is a oh, three of three in a grand commodity super cycle, it'll erase all these divergence and just keep ripping up because people keep just rushing into it. So that's the other part. And why I stay long in the energy sector, energy, food. Let's look at something. Oh, come on. I looked at too many charts. It broke Moo Moo. Man, that thing is beautiful. Look, it ran right to my line. I draw all these dumb lines. Let's get rid of some of these. Let's see what we really need. Do we need this? No. $4.14 was my line. This should be extended, but that's all right. We should get a pullback to 344 and then rip up. Let's see if that matches SLB. Let's see it. Oh, come on. Okay. So here was the last commodities cycle. And see how these would turn down like this all the time right at the start here. So that's what we're going to go through here. So you're going to see that quite a bit. Let's see if I can go back to that time period again. Yeah, look at all this time you crossed over, which is why you just have to know the cycle you're in, where this can cross over and that's not not the end of the world by a long shot. So that's why I'm not as concerned with the RSI crossing over. I mean, I'm concerned as in I'm watching it, but I'm not panic like, oh, I need to get out, like I am with tech because of where it's at in the cycle. With where tech's at in the cycle, any RSI divergence, and I'd be, yeah, I'd I'd have a hair trigger on that thing. See a divergence in tech, I'd be out. I wouldn't be in tech, but yeah. And see where that's setting up. So this could just come in Monday and start ripping, just start lifting. Or it could drop and close that gap. You never know. That's why I say on red days you just got to buy these because that thing's only going up. Up, 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 up. Yeah, shares getting called away isn't the worst thing on the planet. You can always re enter. I mean, nothing goes up forever. Look at that. That had a great drop today. And look at that. That's just great looking. Just great. Ah, yes, I wanted to look at my hypers. And that just turned down. Boy, boy, vey. So it looks like 9 for nano. $45 is the 786 on Oklo. But it could drop down here to 27, maybe as low as 22. Yeah, these were bleeding down, and we might. SMR did make a new low. That's what I was afraid of. It was flirting with all this, and I wasn't sure if it did or not yesterday. I knew it was close, but Lightbridge did. So that means that uh, this should go again another cycle down. So I think we're going to see the lower numbers here. So I think we're going to see a panic sell. And I think this will come down to the $7 range, which would put Oklo in that $20 range, 25, 26. SMR, man, it was trying to hold on to that thing. But it might panic drop down here to 7. And the same for Centrus. I mean, Centrus you could get at 75, and they actually make money. But those look like they're going to get smashed. XOP and financials went up. And that's odd. And that's like another dead cat. Everything else just got crushed. Defense really got crushed. The rare earths are gonna get. I was looking at AREC earlier, and it looks like it. See, it's at that 200 where it looks like it needs. It'll probably get a bounce up to 297 or so, but I think this needs to come down, and I think it's going to come down to about $1 again. They just never finished their breakout, and then they just collapsed. And that's what I mean. Nothing was safe. That's why I hedged everything. And when I hedge, I sell calls. So like I'll take my $22 here, and then I'll take that $22 and I'll buy a put. In this case, I would like a 2.5, but yeah, I'd probably sell a 2.5, 40, and then buy a 2.5 put. So I would sell this option and buy this option. And what that is, it's a clothed short. You're shorting your own position. So you make money off of the drop in the stock in your own position. If that makes any sense. You're using your own shares to short with. You know how naked shorting is borrowing someone's shares and selling them and then buying them back and giving them back to the person that you borrowed them from? That's naked shorting. This is, I own the shares, so I'm selling those. That's these, selling those shares as an option. And I'm taking that money and I'm buying a put for downside protection. So when the price drops, this goes up with that money that I sold the share at. So I am shorting my own stock when I do that. Does that make sense to anyone? But that way I still own the stock. So I don't have this like everyone else, like panicking, like, my stock's dropping. I'm like, yay, my stock's dropping. Because I'm going to cash these out and flip that around and buy more stock with it. And I did it all with my stock. I didn't need any money. I sold these $40. Turn around, buy these 32. Okay, keep $8. And now if the stock drops, then I sell this for 50. This expires worthless. Take the $50, buy some stock. I didn't need any money. That's why everybody, well, I don't have constant income. You have stock. That's your income. Okay. So if you have 100 shares, and I'm using AREC as an example, and we'll go to the chart right here. You're on the 200, so you're probably going to bounce maybe to 297. Maybe they just suck people in and no bounce, just gap and crap. So, but I think your target is around $1. So that's the chart. Then we go to the options. Here's your calls. This side, these are calls. This side is puts. So if I believe that it's going to drop to around $1, I can sell these 250 calls for about 40 cents. And this chart is fine because we want these to expire worthless, and that's a dead chart. So the chart says odds are these could expire worthless. So that's what we want. So we want to sell these. So then we collect that $40. Okay, see that? That's just an average. I'm just using the numbers that are shown here. It all changes when the market's open. You realize that. This is just a general rule. So I would sell this for $40. Take that $40. So now my 100 shares can be called away if price is above 250 on April 17th. But I don't think it's going to be. I think it's going to drop, right? So I sold that. I get the $40. I take that $40. I turn around and I buy one of these puts for each 100 shares. Now, these puts, you have a low, but you have a higher low. And look how you came off the bottom here. So I think you get another bounce out of these puts to maybe $60. So I take that $40 that I had there. I buy a put for 32. That's the average that it's going for. So I keep the $8 difference. That goes into the account. And I have this put. So now when price drops, yes, the value of my 100 shares goes down. But the $40 that I collected the $8 sitting in my account is still $8 in my account. That doesn't go down, just the value of these shares, right? Now the value of my put goes up. So my account as a whole, I have more cash than I did before I sold this. And now as my stock drops, I have more value in my options than I did before. So I have more cash in my account and more value in my options, but my stock is dropping in value. If I like the stock, how do I feel about this situation? Pretty dang good, right? Because I don't believe the stock's going to stay down forever. So now I sell that put. I'm just using what ifs now. Sell that for $60. Say this drops. Sell that for $60. This expires worthless. I still have that $8 in my account. I take that $68 and I buy $68 worth of AREC stock. And that's how you grow an account without adding any funds to it. that's why that's you love. I love these drops. That's how my account. That's how I can grow. When I sell calls and then the stock drops, I can buy more, and I get to buy more because I have protection against it. Here, let me use a different stock as an example. I'll use USAR because I did that with USAR. Okay. And USAR was another one where we had this false breakout and then it broke down. So now I'm looking at USAR. Uh, it could go as low as about 780. But I'm looking at it at around 12. So what I did is I sold 15 strikes. No, not for March. I sold April. I sold April. Why are these so okay? I sold April 15 calls and then I bought 15 puts and I was able to buy 2 for 1. So when this dropped 8%, oh man. Yeah, I was like yahooing down a slide today. I was like, yeah, drop, 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 drop. I mean, I crushed it on USAR today. And the worst thing, if the stock goes up, I used the money that I didn't spend any of my own money. I used the money selling the stock. So if the stock were to go up, then I would have, at the worst case scenario, had it called away at 15, but I got paid whatever it was at that time, 6 something. So I would have sold it for essentially $21. So that's the downside. The downside is that if the stock shoots up, then I would have ended up selling it for $21. That's where um, me knowing when to leave is beneficial because I can sell these like qubits. Well, USAR is one too. I mean, I sold a 15 call when this was up in the 20s. So I just, yeah, knew a drop was coming, sold 15 calls, bought 15 puts for super duper cheap, made bank. So yeah. But I did the same thing with qubits. I actually sold 10 calls because I think this is going sub and this hasn't even started going yet. This is still hanging on. But I sold 10 calls on this. Strike 10. Yeah, all the way down here. I sold these for $1,400 or something like that. And then I bought, was it 16 or 18 puts? And these were only, I forget what they were, 60 cents, something like that when I bought them. So yeah, crushing it off that. And I didn't spend a dime. All I did was own stock. Yes, same date and strike. That's how you short your own shares. your covered call and your put are the same date and strike. I mean, you don't have to be uh like qubits. I sold a lower put. I bought a higher one, just just the way it worked out. But yeah, generally I do the same strike. The you just because of how the market is, I sold everything a little low. Um, I sold UUU even, and that one I went crazy. I think I sold Jan 7 like they're at 400, so it must have been 20 strikes. But I sold these for like $980, almost $1,000. Yeah, I mean they're well above my cost. My cost for UUU is like five $5. I think I'm under five even. But yeah, I think UUU goes down to 15 or so, which which leads me to think that we, because energy is going to sell like that, I think we get a market panic, which we didn't have today. Today was still not panic. Today was still orderly. And the reason why I can tell that is the VIX. I mean, that the VIX was totally orderly today. I mean, that was nonsense. It was sheer nonsense. So there was no panic in the market. At least no, and the VIX is only 30-day puts. Most people buy closer than 30 days. So that's a that's a quick hedge. So when VIX spikes, it tells you that they're really panicking because they're buying longer dated puts, which means they want protection for a longer time period. When they buy the like short dated puts, they only want protection for a day, which is what they're doing. They're buying like these 0 DTE puts, and they're just getting protection for a day. And the markets, uh, eventually, it's going to shake them of that. They're going to get scared, and they're going to want longer term protection. Look at that. I mean, that was. See how this was above the Bollinger and didn't break out, but look how your 50 was below the 200, which is why you didn't break out. Look at us today, 50 above the 200, still within the Bollinger. And it's like, no, I'm not going to let you break out, even though we were down 1.5%. No, I'm not going to let you break out. That's how you know it's a Fugazi. This is just, this is waiting to rip someone's head off. I think the whole market is. I think people are still complacent. I think after today, they're still complacent. I think they're going to come in Monday and they're going to buy, and I think the bottom's going to fall out from under them. And I think it'll do it again Tuesday until they get it through their noggins that maybe I should stop buying or they run out of money, whichever comes first. but I think their conditioning to buy is going to be their doom here. Yeah, the VIX, that's what I was trying to say. The VIX runs off of extended panic. So there's no extended panic, which is what I've been saying. The people, and I don't think it's people, I think it's algorithms, because the algorithm doesn't know. They just read headlines. They're AI. You know that, right? So they just read headlines and make trades according to headlines. They don't disseminate true or false. So, yes, the market is trading off of lies. It absolutely is. It doesn't know better. And so that's why people say, well, how can it believe this data? Because what else is it going to believe? It doesn't know better. So when all this news comes out, like, oh, this war is going to be over in 4 days, it doesn't know better. So that's why the market is going along like everything's fine. It doesn't know better. So eventually someone's going to sit down at their computer and say, I'm losing millions of dollars. Shut this thing off. Sell, sell, sell. They're going to do the trading places. Get in there and sell. Because the algorithm doesn't know what a lie is. It just reads headline. Oh yeah, we've got this thing under control. It's winding down. It doesn't know the headlines that no, it's not winding down, it's ramping up. And it's walking itself into a huge freaking trap, the market. Well, in America too, but the market. It's it, its ability to not know fact from fiction is walking it into a massive slaughterhouse. And if you want me to go there, astrologically speaking, that's what happens. We should start hearing the truth now. Deception should be, that veil should be going away. It should be pulled back, starting to pull back now. So that tells me without deception, there's nothing to float the market up on except paper money. Paper money and lies. That's what we sell. Just look at that monthly chart. I mean, there's no getting around that. And you're still lower than these. It's like I don't think so. Yeah, I think the market is gonna lull lull investors in with complacency, and then it'll have one day where it just absolutely tears them apart. Today was not that day. Iran's trying to make deals with everybody. They're, in fact, they made that a public statement. They said we'll let anybody sell or anybody pass through the strait. Anybody wants to trade oil, we'll let them do that, but they have to do it in the yuan. was what their deal was, which is when we started bombing their oil fields. Imagine that. And then Trump's like, no, we didn't do that. Wink, wink. They said they were going to sell oil in yuan and we bombed their oil fields. No, that didn't happen. Wink, wink, nod, nod. Yeah, yuan, China currency. That was Iran sent that to the world. They said, we'll let any ships pass. We'll sell you oil. But it's got to be in yuan. And that's when we bombed their natural gas facility and oil facility. And then they said, okay, and started bombing Saudi and UAE and Kuwait, Qatar, Iraq. And they just let everybody have it. We're playing the oil bombing game now. Cool. But yeah, this whole thing is a dollar. It's all about the dollar. Dollar, dollar, dollar. The dollar, and then, well, greater Israel for Iran. That's the other reason we're there. Try to save the dollar or control the dollar through the strait, and then for greater Israel. Yeah, Iran stated that their goal is to destroy the U.S. economy. Iran doesn't need to win the war. Well, that's how they'll win the war, is just destroy the economy. And to destroy the economy, all they have to do is keep the strait closed. That's Iran's only objective. Keep the strait closed. As long as the strait's closed, the dollar's going to fall because the oil dependence. Japan will eventually buy oil somewhere else. And so that's what America's trying to prevent. That's why they're like, okay, Russia, you can sell your oil, but sell it in dollars. We'll sell oil to everyone. And that's what Trump's walking the fine line, which he can't walk. Let's just be honest, of trying to keep prices low in America and sell oil to everyone else in the world. That's a line that can't be walked. I believe India is paying in the yuan. Yes, I believe that is correct. And I believe Russia sells oil in the yuan also. And Russia has an oil flotilla going to Cuba. I don't know if you knew that. Trying to end the oil blockade on Cuba. So things are not getting better. Things are not cooling down. Things are heating up. Russia's targeting islands. China's targeting islands, obviously. And it's all about expansion because it's energy. Everything wants to expand. Everything wants regional control. And they want to expand their region because they need more resources. The U.S. is taking oil from South America. That's why we invaded. That was the intent, is to control the South American oil. We want to control everything from South America to Greenland. and control the Suez Canal. That's why Trump made such a big deal about kicking China out of the Suez Canal, because we need to control the canal and then from South America to Greenland. So you control the entire Western Hemisphere. That's the strategy, because that's all the resources and energy and everything you need. It's all, you wouldn't have to outsource. You wouldn't need to export or import from anywhere. Yeah, that's true. Is Israel will benefit uh, a certain a certain portion of Israel will benefit, assuming this works out well, and America only loses. There's nothing to gain except holding the dollar, and we didn't need to. The dollar wasn't, it was a threat, but it wasn't at imminent threat. And now that I say that, I think that's what Trump probably means when he said imminent. When they say imminent threat, they probably meant there was an imminent threat to the dollar. But anyways, they were eventually going to shift off the dollar. This was a long time coming, but yeah, the U.S. has nothing to gain there. We're just losing resources, men, status, but that's what's necessary to reset America. We need a complete leadership uh, system overhaul, and that should happen. Yeah, the they knew that they were eventually going to shift out of the petrodollar, and the goal was to shift into crypto, Bitcoin specifically, but all crypto, and tie it to the dollar with stable coins. And so that's how they would keep the dollar going. They would just sell treasuries, make these stable coins by the treasuries, and everyone would use cryptocurrencies. And that's also how they keep their, and air quote bunny ears, promises of no CBDCs, which is a central bank digital currency, except they just have all these uh, cryptocurrencies that are owned by the government. So it's just not one. See, it's all in wording, and people don't understand that. They think, oh, no CBDCs. Look, they signed into law. There's not going to be any CBDCs. No, there's not going to be any CBDCs. There's going to be a whole bunch of government owned crypto that does the same goddamn thing as a CBDC. It's all social credits. People don't understand words. That's why they send you to school to get educated, so they can teach you how to not understand what they're doing. Look how this did exactly what I said it was going to do, though. Look at that. I said that candle on the 200 was just trying to get back up. It's going to break down today, and it did. And now it'll probably try to touch the upper Bollinger at 587, which it tried to towards the end of the day. And then I think it's going to dump again, dump hard. There's no such thing as private sector issued crypto. That's the key. They're all issued through banks, and they all have to get government approval. That was I I never understood that from the crypto bros who were screaming, "We need government regulations." It's like, what do you need government regulation? Isn't that the point of crypto, was that it was unregulated by the government? So now you're rooting for the thing that made crypto what it was? It never made any sense. But yeah, crypto's a colossal trap. All of crypto is a CBDC. It's all a CBDC. There's no open source or there's everything they're telling you is a lie. It's all a CBDC. It's all government tracking, government control. But yeah, they were going to use, they still are, that's still their plan, is to float everything into stable coins and cryptocurrencies. And then they're doing away with pennies now. It'll be nickels, and then it'll just be all change because inflation will go up so bad, metals will go up so high that they'll just say, we can't make these coins anymore. So no more coins, just these dollar bills. And then it'll be, well, the price to manufacture these is so expensive. We'll just go to these, we'll just let you use all these cryptocurrencies. And then as soon as you start using them, then the social credit scores come out. Well, I think you're using that for the wrong thing. I think we should pass a law that people should only use them for these things. And then you keep going down this road, and that's how you live in hell. No, I would not buy crypto. I would the funny thing is I would use cash to save cash. I don't even like using debit cards. I'd rather have cash. When I do get paid, I take that all out and I buy silver and then take the cash. I don't keep money in banks. I don't, yeah, I don't operate through that system because the system it's fraud. When is it a good time to buy gold and silver? Physical gold and silver, any day is a good day, but not, I don't think that's what you were asking. Any day is a good day to buy physical gold and silver. Wear it, put it on your mantle, look at it, hide it under your bed, put it in a vault, put it, yeah, just just enjoy it. I think you come all the way down here 4,000. That was my call on gold. Yeah, for a long time, 4,000. Let's see if now we I'll do from here. I mean, you could go down to 2,600, but I don't think you do that. I think you only drop to about 4,000, maybe 3,800 if you're really lucky. And again, this isn't people think the world is going great, so they don't need to uh, stockpile gold anymore. That's not what's happening. What's happening is we need oil and we need a way to pay for it, and they're not accepting dollars. That's what's happening. Silver. Oi, that is ugly. So that's a B, C. So we could do this two ways. Let's do both of them. So there's one that has you between 62 and 74, as low as 46. I tend to agree with this 46 more. I think I had 50 to 55 is my target for silver. So we could do this another way also. We could do it like this. And we can go. Bum, bum, bum. Okay, get out of there. And that would put us right around $53. So yeah, that's kind of where my head's at, right in the 50s. Oops. Yeah, I can't believe how people think this is breaking down. How is it going to break down? I don't explain that to me. Someone riddle that to me. All right. I think I'm going to close it up. Anything anybody wants to see? All right. Cool. Have a great day, everyone. Look at that bounce we had. Look, it really took off after hours, didn't it? I didn't even notice that. I sold my I had I'm sure you heard me talking earlier, but I had 0 DTEs today. At open here I bought 590 puts, and so this thing was dropping and I covered in here somewhere. Um but then wow, that really ran up after hours. I wanted to buy puts again, but it never got up to anywhere where I wanted. I thought it would climb more. And yeah, this is where I would have liked it. 588. Yeah, dang. It did that after everything was closed. And I was out building a fire, not paying attention. I should have shorted some futures. But 588 is where I think we bounce to. And I think, yeah, very interesting. Futures open on Sunday will be very interesting. Very interesting. All right. Have a good day, everyone. Be safe, be wise, be bold. And as always, good luck.